Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the CBOE, I'm Jamie Tyrrell with Group 1 Trading. Well, it's good to be back doing the sonar. Had Andrew and Chris covering the last few days. Right now on the floor, we're having a bit of a power outage. Half of the exchange floor lost power, and a bunch of announcements are coming over the loudspeaker. So if you hear something like that, that's what's going on. The market is continuing its big 3-day rally. We are approaching 10% rally over the last 3 days. The big drivers, of course, the banks, including Citigroup, saying that they're having in the past 2 months of this year, they showed an operational profit. Today, GE is really rallying because a downgrade today wasn't as big as expected. So right now we sit here on Thursday. VIX expiration next Wednesday on the opening print of the S&P 500. So you have 3 full trading days until expiration and the rest of the day today. What we've seen is a big pullback in the VIX. We were pushing 50, VIX cash levels over 50 last week. With these rallies, VIX cash is in the 42 range, and the front month futures in the 41 range. So what we've seen in the front month option trading is every day it seems another big strike that was a big level of open interest and of fear is kind of coming off the board. Yesterday we talked about how they were selling the March 55s, protection against a big upside move above 55 for 40 cents. Today they're selling the 50s for 45 cents. So it seems every day another strike gets less and less likely in the market's eyes to finish in the money. Andrew talked about a phenomenon yesterday that I wanted to touch on. You never know in these rallies.
If you need to be forced out of the market, please.
There's the loudspeaker. We'll just cut this part off. Yeah. Okay. You never know in these rallies if long-term volatility expectations are going to be changed as well as short-term. So in a rally, typically you see the VIX cash come down, you see the front month future come down, but you don't know what the mid and long-term futures are going to do, the Augusts, the summer months right now. What we've seen is really a big pullback in those as well. The August and July futures have gone from the low 40s to about 35. So they're pulling back almost as much as the front month futures pulling back. So people are saying long-term, because of this rally, they're expecting less volatility for months to come. There was one big trade of a customer who clearly had that opinion, and it was the customer bought the August 40 27.5 1 by 1.5. So they bought one August 40 put, they sold 1.5 August 27.5 puts. Now what they're betting on here is basically that the VIX will finish between 34 and 17.5. So they start making money below 34, and they make money all the way until 17.5. So they paid $5.90 overall to buy one of the 40 puts, sell 1.5. Now anywhere over 40 they lose their full $5.90, but that's the trade they made. They're betting on a lower VIX somewhere between the high teens and the mid 30s for the long term. So that's what we're seeing here. Jamie Tyrrell, Option Monster. I'll be back tomorrow and next week.
You boys seen an aircraft carrier around here?